Double A audit and assurance. Syllabus we have completed. Yes, we need to practice good questions that will tease you while sitting in the exam. We're having question number 80 from our BPP kit. So one-page case study. There are requirement A, B, and C. Three requirements are there. Requirement A for 4 marks. Requirement B for 16 marks. Important. And requirement C for 10 marks, altogether 30 marks question. Requirement A of the question. Define audit risk. What is audit risk? A risk of giving inappropriate opinion due to undetected misstatements. And the components of audit risk, and there are 3 components of audit risk. What are those? Inherent risk, control risk, and detection risk. We need to provide 4 definitions. Easy 4 marks. Inherent risk, a risk due to nature of the company, a risk that misstatement may occur in the financial statement. Control risk, a risk that control system may not prevent, detect, correct misstatement. And detection risk, a risk that auditor may not detect misstatement. So easy 4 marks. If we are able to define these 4 definitions, would be able to get 4 marks. Otherwise, no mark. Requirement B. Describe 8 audit risk. Audit risk we need to identify from the scenario and explain the auditor's response to each risk, and along with each risk, we need to write down the response. Response means audit procedures. But if auditor asks about write down substantive procedure, we need to write down the procedure by using a specific wording of procedures. In case of response, even we can deviate a little bit from wording of procedure. Just we need to write down what auditor will do, how auditor will verify this is not the issue. Audit risk means issues relating to financial statements we need to explain. Inherent control detection. And response mean what auditor will do, how auditor will verify this issue is not there. So 8 risks we need to identify and we need to write down the response. So let's move forward. On 1st July 20x5, it is 1st July 20x5. You are an audit supervisor of Caving and Company, and you are planning the audit of Hurling Company, a listed company for the year ending 30th September 20x5. Company year end is 30th September 20x5. The company manufactures computer components and forecast profit before tax is $33.6 million. And the total assets are $79.3 million. If in a question, total profit, total assets, total revenue figures are given, this means relating to any account balance, we need to provide materiality as well. Hurling Company distribute its product through wholesaler as well as via its own website. They sell products through different other companies as well as through its website. The website was upgraded during the year at a cost of $1.1 million. So the website was upgraded at a cost of $1.1 million. Additionally, the company entered into a transaction in August to purchase a new warehouse, and they have purchased a new warehouse, mean new asset, which will cost $3.2 million. Hurling Company's legal advisor are working to ensure that the legal process will be completed by the year end, but the legal process relating to purchase a warehouse is not completed yet. Mean the warehouse is not transferred to company name. The company issued $5 million of irredeemable preference shares to finance the warehouse purchase, as well as company have issued irredeemable preference shares to get the money. In this paragraph, there are three issues. Three risks are there in this one paragraph. First, company have upgraded its website with a cost of 1.1 million. We'll put a heading first, website cost. 1.1 million they cost incur. If we compare 1.1 million with the profit before tax of 33.6 million, how much percentage is that? 1.1 divided by 33.6 multiplied by 100. How much is that? Divided by 33.6 multiplied by 100. 3.27%. And against total assets of 79.3, 1.1 divided by 79.3 multiplied by 100. 1.3. So against profit, it is below 5% mean immaterial, but against total assets above 1% mean is material. Company has upgraded its website with a cost of 1.1 million. What could be the risk? Only capital nature expenditure should be capitalized and recorded as intangible asset. The revenue nature expenditure should be expense out. So there could be chances if company misclassifying revenue expenditure as capitalized. Due to that, asset profit could be overstated and expenses understated. This risk we will write down. The cost of $1.1 million spent on website having a chance of misclassification of revenue expenditure and capital expenditure. Due to this, asset profit would be overstated and expenses understated. In this overstatement, understatement, we need to write down what will be the impact of this issue on the financial statement. What will be the chance of misstatement? How we will verify this? What will be the response? Auditor's response. How we can verify this? How we can verify this? How we can ensure that revenue nature costs are charged to P&L and capital nature has been capitalized as asset? We can review the invoices relating to expenditure, review invoices relating to website cost to ensure revenue nature invoices has been charged as expense and only capital nature expenditure have been recorded as asset. So review invoices relating to website cost to ensure only capital nature expenditure charged to asset. What else? 1.1 million cost they have spent. How we can verify? How we can verify 1.1 million cost they have spent? So cash book bank statement. So inspection of cash book / bank statement to verify cost spent. This is what risk along with auditor's response. In a column form, we can write down the risk on left side. On right side, we will write down the response, mean how auditor will verify this risk is not there. This issue is not there. Mean how auditor will verify this issue. Risk mean issue. Are you with me? After writing down one risk and response, we need to put a line so that we can differentiate between next and this. There is other issue. What? Company have a purchased new warehouse with a cost of 3.2 million. A new asset they have purchased, and there is issue. The legal process is not finalized yet, will be completed by the end of year. So there could be chances if the asset is not transferred to company name, mean without having ownership, company have recorded the assets, so that asset could be overstated. And this materiality we can check against the total assets because this is asset having no link with the profit. So 3.2 million out of 79.3 million. How much is that? 3.2 million is what percent of total asset? What percent of total asset? 79.3. 3.2 divided by 79.3 multiplied by 100. 4% is 4% of total assets, and hence material. If due to delay in legal process, asset is not registered under, what was the name of the company? You are supervisor of Craving and Company and you are planning the audit of Hurling Company. Not registered under Hurling Company. Chances that asset could be overstated. Is that? In what will be the chance of misstatement? How will we verify this? How we can verify this? How we can verify ownership? How we can verify ownership? Yes, inspection of registry document, invoices, our registry document to verify ownership. This asset was purchased during the year. How we can verify this is authenticate purchase? It is approved, authorized by top management. Review of board minutes. Review of board minutes to verify authorization for purchase. And after this, put a line. You can write down if there is time, you can write down, otherwise two responses are enough against each risk. You can write down more, but we need to complete paper as well. Yeah. In this paper, there could be timing issue. There could be timing issue. Obviously, you are having 3 hours to complete the paper, but there could be issue. You will not be able to attempt the complete paper within 3 hours. So that's why be specific. Don't write down more than the marks available. For this question, if 16 marks, if you can cover this question with half an hour, enough. Because in MCQ, we can save some time. Though for this 16 marks, 16 multiplied by 1.8, we are having about 28 minutes. But even if you complete in 35 minutes, even that will be enough. Because this is a lengthy question where we need to write down the risk as well as we need to write down the response. We need to think about it. So it will take time. But if you trying this type of question the first time, it will take more than 1 hour. After practicing 2 to 3 questions, you'll be able to complete this type of question within 30 to 35 minutes. This in practice is important. The questions we are covering today, what you need to do, you need to attempt them today after the class before going to bed. This medicine you need to take today. Otherwise, you will be in trouble while sitting in the exam room. Prescription. So moving next, there is third issue. What was third issue? Company issued irredeemable preference shares. First time in audit paper, they stated issue relating to preference shares. In a book, there is nothing about preference shares. We can relate to other reserves, equity, share capital, and other reserves. Company have issued irredeemable preference shares. Preference shares are of two types. Redeemable, that we need to pay back. Irredeemable, that we never ever pay back. And company paying a fixed interest rate on preference shares, that is though not mentioned in the question, but on preference shares, company pay a fixed rate of dividend. Redeemable preference shares, we should record under non-current liability because they are like debt that we need to redeem after a certain time period. Irredeemable preference shares, we need to record under what? Equity. So if company have issued 5 million irredeemable preference shares, 5 million against total asset is this much a percentage and hence material. It is about 7%. So it's a material. So there could be chances of misclassification of irredeemable preference shares to non-current liabilities instead of recording under equity. Redeemable, we need to record under non-current liability, but irredeemable under the head equity. So there could be chances of misclassification of recording irredeemable preference shares under non-current liabilities instead of equity. This we can write down. So we'll put a heading irredeemable preference shares. How much? $5 million is a dash percent of total assets, 6.3% of total asset, and hence material. There could be chances that company may misclassify irredeemable preference shares to liabilities rather than stated under equity in balance sheet. How we can verify they are classified under equity rather than non-current liabilities? Review of financial statement to ensure irredeemable preference shares has been recorded under equity in balance sheet. Instead of balance sheet, we can use the word what? Statement of financial position. If company have issued, can we check authorization? Can we check authorization? How? How we can check authorization? Review of board minutes to ensure authorization of preference share issued. Even we can inspect cash book bank statement to verify cash receipts against issue of preference shares. If you have practiced 4 or 5 questions, then we can write more than 2. If we have practiced less than 5 questions, then survive part 2 only. Otherwise, you will not be able to complete your paper. So inspection of cash book bank statement to verify receipt of cash. Obviously, there are some marks. If examiner have provided amounts, this means he is expecting you to calculate materiality as well. If you are not calculating materiality, there could be getting some marks. So 3 issues we have identified. We need to identify 8. During the year, the finance sector has increased the useful economic life of fixture and fittings from 3 to 4 years, as he felt this was a more appropriate period. They have increased useful life of the asset. What could be the risk? Why is it increasing? The increasing useful life, more year, will result into lesser depreciation charge. Lesser depreciation will result into what? Overstatement of asset, profit, and understatement of expenses. That management try to do. Is that? So there could be chances of asset, profit could be overstated, expenses understated. This is a risk at planning stage. We need to identify risk, not actual, could be. Chances could be. So we'll put a heading. What? Change in estimate. This is estimate. estimate useful life. So fixed F and F useful life has been increased during the year. There could be chances. Asset, profit could be overstated and expenses understated. If company is a changing estimate, there is accounting standard IAS 8 that says if company is a changing accounting policy or accounting estimate, they need to provide disclosure in the financial statements. So there is a risk. Estimate change. It's not disclosed in financial statements per IAS 8. If you provide the reference of IAS 8, this will put a smile on examiner face. He might award you certificate. IAS 8. Because these accounting standard reference examiner is not expecting at this level. At advanced audit and assurance level, we need to write down the accounting standard. We need to provide reference of accounting standard. But here, examiner is not expecting, but if you are providing, it will put a smile on examiner face. So how we can verify the useful life he has changed is genuine? There was no intention behind it to overstate asset and profit. How we can verify? I mean, the useful life he has changed, actually the asset is having that useful life. Is this the matter involving judgment estimate? Regarding matter judgment estimate, we require an additional evidence from management that is called written representation. So we'll obtain written representation from management regarding reasonable estimate. Can we confirm the life from any external person? Yes, we can confirm any of the external expert. So consult independent expert regarding useful life of asset as 4 years. And regarding disclosure, we can review financial statements, notes to the accounts. The disclosure has been provided. Four issues we have identified, four remaining. Shall we move forward? Okay. The finance director has informed that the audit engagement partner that a revised credit period has been agreed with one of its wholesale customer. The revised credit period has been agreed with one of its wholesale customer. Mean we have provided or we have revised credit terms with one of the customer as they have been experiencing difficulties with repaying the balance of 1.2 million owing to Hurling company. They have changed the credit terms relating to one of the customer. Relating to that customer, there is a receivable of 1.2 million. And that customer is finding difficulties in paying the amount. So there could be chances if this receivable is experiencing difficulties, is unable to pay the debt, so there could be chances of bad debts. And if provision for doubtful debts is not recorded properly, chances that asset profit could be overstated and expenses understated. And amount is what? 1.2 million. So we'll put a heading what? Receivable. 1.2 million, 4.2 million. 1.2 million is dash percent of total assets. 79.3 is more than 1%. 1.5% and hence material. Why material? Because 1% or more of total assets is considered material. 5% or more of profit, 1% or more of total assets, 1% or more of revenue. So as customer experiencing problems in paying the amount due. So there are chances. Asset, profit could be overstated and expenses understated. If what we call it irrecoverable debt or provision for doubtful debt, whatever the term you want to use, you can use. If bad debts has not been adjusted, provision for doubtful debts is not adjusted. If provision for doubtful debts is not adjusted, how we can verify these bad debts? How we can verify company will be able to recover this amount? Correspondence, review correspondence. With whom? With the customer to ensure any chance of recovery in future. What else we can verify? If they are recording receivable, they are keeping this receivable at year end. So in post year end cash receipts, we can verify whether cash has been received or not. If cash is not received, we will ask the management, what's this? So inspection of post year end cash receipt to verify cash collected from receivable. Is that one more we can discuss with management the likelihood of recovering this balance from the customer to see if reasonable. Mean this procedure wording specific is not required in response. We need to write down in English how we can verify this, what the document we will inspect or review, and why we are reviewing or inspecting that document, that we need to explain. And we need to provide English. If we are able to write down English, this part is not that much difficult. Just we need to practice 2-3 questions. Written practice will be able to write down in the exam center. And we need to adopt an approach how to write down the response. So 5 issues we have identified, 3 more. Okay. There is so many information still available. In January 20x5, Hurling company introduced a new bonus based on sale target for its sales staff. This has resulted in a significant number of new wholesaler customer accounts being opened by sales staff. If bonus is attached to their sale, they will try to record more sale to get the bonus. Due to this, sale could be overstated by creating fictitious customer account. Is that? And the information is also there. They have opened so many new customer account. The new customer have been given a favorable credit terms as an introductory offer. Provided goods on the are purchased within a 2 months period. As a result, revenue has increased by 5% of on the prior year. And there is increase in revenue as well. There is chances of overstatement of sale by creating fictitious sales. So put the heading what? Bonus. In the main issue is what? Bonus. Sales staff. Receiving bonus based on sales target. And increase in sales of 5% is material. There are chances sales could be overstated by creating fictitious customer account. How we can verify sale is not overstated? We should verify completeness of sale or occurrence of sale. Occurrence of sale. How we verify occurrence? We trace a sample from sale ledger balances to relevant invoices, dispatch note, order to ensure sale is supported by this. This is what we will write down. Trace a sample of sale ledger balances to ensure there are supporting invoices, GDNs, and orders from the customer. Because if they are there, the sale is not fictitious. If previous supporting documents are not there, sale is fictitious. Is that? What else we can verify sales to cash book and receivable ledger as well. So compare sales with cash book and receivable ledgers to identify differences. Instead of identify, we will use the word investigate differences. Six, two more. So we have written on about website cost, warehouse purchase, irredeemable preference shares, change in estimate, receivable, bonus. Let's move forward. The company has launched several new products this year. And all but one of these new launches have been successful. And all but one of these new launches have been successful. Feedback on product launch launched for month ago. I mean, this is the name of the product launch that was launched 4 months ago. Their feedback has been mixed. And the company has just received notice from one of their customers. Pentac company and of intended legal action. They are alleging the product sold to them was faulty, resulting in a significant loss of information and an ongoing detrimental impact on profit. As a precaution, sales of Luge product has been halted and a product recall has been initiated for any Luge product sold in the last 4 months. There are two issues. One, they have filed a suit claiming damages. And if they will be successful in this suit, company will need to pay the damages. And if this matter is meeting three conditions of IAS 37, probability of future economic outflow, then for IAS 37, there should be provision. Even if not a probability, there is a possibility. So company need to provide what contingent liability disclosure. Is that? And other issue, they have stopped selling this product. And this product is still in the closing inventory. If they haven't adjusted the closing inventory could be overstated. Is that? There are two issues. One is relating to provision and one is relating to closing inventory could be overstated. Either we can write in one or we can write down separate closing inventory separate and this matter of claim that is separate. So put the heading product Luge company is facing a claim from customer due to You can write down. You can write down, otherwise, main our client name is necessary, customer name, ignore. Use the word customer. So customer due to faulty product supplied. As per IAS 37, if there is probability of future economic outflow, there must be provision recognized. Otherwise, expenses, liabilities could be understated. If expenses are understated, what will be overstated? And profit could be overstated. How we can verify there is possibility or a probability whether provision is required or not? What is the best source from whom we can ask about the probability, mean chances above 50% or below 50%? Lawyer. So consult lawyer regarding the probability of claim outcomes. What else? Is that matter involving judgment estimate? Do we need to obtain written representation? Yes, obtain. Written representation from management regarding reasonable estimate. What else? Discuss with management regarding likelihood of the customer complaint. I mean, what are the chances who will succeed, you or customer? So discuss with the management regarding likelihood of the claim and accounting treatment that they have adopted. And if they are recording provision, we will ask them why you are recording provision. If they are not recording provision, we will ask them why you are not recording provision. And there is some issue of inventory as well. Closing inventory. The product launch is halted and still still remain in warehouse. There could be chances. Inventory may be overstated if not adjusted properly. How we can verify how much inventory relating to leverage that need to be adjusted? Count sheets. So review inventory count sheets to verify the inventory leverage units requiring adjustment. What else? We can discuss with management regarding the accounting treatment of adjustment to the inventory. At what amount they are going to adjust or not. So discuss with management. Regarding adjustment in financial statements relating to inventory. Obviously, there will be no marks for that. What next? Yeah, obviously scrap are might be they have recorded a little bit amount that they can recover by selling at scrap. That's why we are discussing. The finance director is keen to announce the company's financial results to the stock market earlier than last year. And in order to facilitate this, he has asked if the audit could be completed in a shorter time scale. In addition, the company is intending to propose a final dividend once the financial statements are finalized. One, there is a time pressure that they are putting on us. If auditor is unable to detect misstatements within that short time, this is what detection is. Auditor may not be able to detect misstatement within that short time, so we can put as a detection risk. The time pressure imposed by management will result into misstatements may not be detected by the auditors. is detection risk. How we can resolve this? How we can resolve this? What should be our response? We should spend more time on the audit and revise our audit planning. So revision of audit plan is required to put more staff on audit of this client. But if we are unable to do this, we don't have extra staff, then we can discuss with the management to resolve the issue. Those charged with the governance, discuss with those charged with the governance to resolve this time pressure issue. So as per required marks, we have attempted this question, but still there is some more information that we need to cover because we are learning now. In exam paper, you could miss some of the point. Okay, the company is going to propose final dividend. Which dividend should be recorded in financial statements? Proposed or approved? Approved. If they are recording proposed dividend, financial statement could be misstated. So we can put the heading dividend. Only approved dividend should be accounted for in financial statements, not proposed. If management recording proposed dividend financial statements could be misstated. How we can verify the dividend is approved or not? Review board minutes to ensure the approval of dividend recorded in financial statements. What else? Hurling company's finance director has informed the audit engagement partner that one of the company's non-executive director. I think this information is relating to next requirement. Part B, A, we have completed. Regarding part B, if we see how many risks we have identified, website cost 1, warehouse purchase 2, irredeemable preference shares 3, change in estimate 4, Receivable 5, bonus 6, product lose 7, closing inventory 8, detection risk 9, and dividend 10. At least we need to write down 8 risk. Part C of the question. Got 10 good marks. Identify and explain 5 ethical threats which may affect the independence of a Kevin and company audit of a Hurling company, and for each threat, suggest a safeguard to reduce the risk to an acceptable level. I mean, you need to identify 5 threats, not risk, ethical threats, and we need to provide safeguard. Again, this question we will attempt either in column or in paragraph. It's up to you. Either you want to attempt in column or you want to attempt in paragraph. I'm going to attempt in paragraph. So let's remove this. So from last paragraph, we need to identify ethical threats as well as safeguard. Hurling Company's finance director has informed the audit engagement partner that one of the company's non-executive director has just resigned. Okay, this is company issue, not our issue. And he has inquired if the partner of Kevin and company can help Hurling Company in recruiting a new non-executive director. Who should appoint the client staff? Company management. If we are performing management level function, there is advocacy threat. So ethical threats. Part C. So first issue is appointment of NED. We'll put the issue as a heading. If engagement partner is involved in recruiting NED for audit client, he is performing enemy level function, creating advocacy threat. This could affect auditors' independence and objectivity. What auditor should do? I'll put a heading safeguard here. I will write down safeguard in Excel. Involvement in client staff recruitment is not prohibited. Prohibited. It's allowed. It's not prohibited. Auditor could involve himself in staff recruitment, but should be restricted to shortlisting and conducting interviews only, not the final selection, as that is management level function. One threat and one safeguard, 2 marks. Next, specifically, he has requested that engagement quality reviewer who was until last year the audit engagement partner on Hurling company assist the company in this recruitment. Kaving and Company has also provides taxation services for Hurling Company in the form of tax return preparation, along with some tax planning advice. So taxation services. Providing tax services to audit client. Create self-review thread. Affecting independence and objectivity of auditor. We are also providing what? Not only preparing tax return, we are planning advice also providing. So tax planning advice will create what? Advocacy thread, advisory services. What could be the safeguard? What could be the safeguard? Audit can provide taxation services to audit client, but through Chinese walls, i.e. separate staff for audit and non-audit services. Are you with me? The finance director has recommended to the audit committee of Hurling company that this year's audit fee should be based on company's profit before tax. So this is what percentage or contingent fee. We'll put the heading. Percentage fee or contingent fee. Audit fee based on client profit percentage would affect auditor independence and objectivity, resulting in self-interest threat, as well as which other threat? Pressure, intimidation threat. What also should do? Safeguard. Auditor should not work on contingent fee or fee based on profit percentage. The fee should be fixed and decided before starting the work. To avoid the fee pressure. Three issues, threat, safeguard, we have written down. At today's date, 20% of last year audit fee is still outstanding and was due to be paid 3 months ago. So outstanding fee, overdue fee. We'll put the heading overdue fee. Self-interest as well as intimidation. So overdue fee or outstanding fee will create self-interest and intimidation threat affecting independence and objectivity of recovered or resolved before starting the next work. He should not work on overdue fee. He asked about identifying the five threats: overdue fee, percentage fee, taxation, appointment of non-executive director. Where is the fifth one? Where is the fifth one? Where is the fifth one? Non-executive director. We have identified appointment of non-executive director. Taxation services we have identified. Audit fee based on percentage we have identified. Here we have written down under one issue two threats as well. So this will be counted as a fifth one. Or if you move towards start of the question, there could be some information. You are the audit supervisor of a Capric and company, and you are planning the audit of a company for the year ended. The company manufactures computer components and forecast profit before tax is this and total assets are this. There was some information in the scenario. They are putting a time pressure on you. Time pressure, pressure, intimidation threat. So we can write down intimidation threat, time pressure. So client putting pressure on auditor to complete audit work quickly. This could affect objectivity of the audit, resulting into what? Intimidation threat. Safeguard. How we can resolve this? Any pressure on audit work must be resolved by discussion with audit committee. If still unresolved, consider withdraw from the engagement. I mean, we should not work under pressure. If there is any pressure, we should resolve by discussion with audit committee. If still unresolved, we should withdraw from the engagement. Is there anybody online? Yes, Ashok is online. So you don't need break. We can move forward. Okay, take 15 minutes break because after break we need to cover two more good questions. Not, I will not write down in that much detail. We'll discuss the risk, but procedure response I will write down. So let's take a break. After break, we'll be having some more questions.
Making noise, you know. Jeez. Um, you have to take, you got your evidence ID. You got it. You have to take the evidence ID with you. This docket. And nothing else is allowed in the class. Like example, if you are taking water, it should be transparent. Like anything of passport, like public evidence taken. No, if you have evidence ID, then that is not passport. If you don't have evidence ID, then you have to take passport. But along with passport, it is like that your permit is the passport, only passport. Like, do you know, say, I'm regarding my writing, like more than That's why. But my also brought is irritated, but I can already go to the existing 2 months. It's time. It's so down to know but it's the best to do you get problematic it's not? Oh, you do that. You're what I need to do. Oh. Biscuits, I also wanted biscuits and I what has the sleep with rice? It's just 15 minutes. Yeah. So it's it's already been 5 minutes. Yeah, it's true. Not keep that for later. Put it inside. I am very hungry. Okay. That's it. Give me, sit. We have more rice, but we don't think of it. What? We have more rice before we have to finish each other. Sit. Why aren't you sitting? The whole room is full of biryani smell. That's good. I could microwave it more, I think. It's okay. Very good. Yeah. No, it's fine. That's weird. You should have taken it off the plate and then you have my Actually, I asked her that if there is any plate that he should. That's good. It's so hungry. Right. Wait, chicken, why aren't you making chicken? Right? If I would have known earlier, no, if I would have taken it from my place. Yeah, forgot. I tried it. Yeah, I know. But you didn't try it from your place, no? You should have. No, but I made money very late. Thank God they give bigger pieces. Usually it's not this, even came. Usually it's not this big. This is the best price. Chicken and this is Java style. This is Java style. Yeah. From rice and bottom. Because we use that big rice. Long basmati rice. Yeah. And the people who get the small rice. In Bangladesh, this rice, but not for biryani. This is our regular rice. Yeah. You are doing it for regular small. For biryani, it's like long rice. No. It's like a wonder now the exams are taking the time. From last 1 2 weeks. Yeah. No, it's the evening time. Yes, from last few days, it's not been clear. That was all that it. Chicken back. No, no, completely. You will complete it. Hold. I will take it. I will. You want some biryani? You eat biryani? Then vegetarian. No, so that this is vegetarian. She's pure veg. She's pure veg. And will put some rice. It's in the current rice. And step up pieces. I don't really like this. I don't know some into. I like biryani one that's like I will be able to tomorrow if you want. It's amazing. Few chickens. I don't think you're people. I don't think it is on my so it's take masalas. Okay, that's a problem down to but one service. That's not when that's the no, taking part of what now. But I saw the whole one the whole thing. Yeah. It's fine. It's fine. One is more than the plan of the zero to the bigger of no what they no. No what they no. Can't just do it. And this is not that. Oh, take one the for the for our community. Was now oh very good. I don't know that. I'm not sure that after although no when I is you will do that. You completely your papers very safe. And when you do not get the big I don't like that. I don't eat that. I just that's good with this. I don't know, but I don't. It goes. Why did she take that away on there? No, it's not that either. That's like something like, you know. No. 12, 2, 3, 9, 12. Yeah, I'm done. Like plastic, but like, you know. The correspondent is good, right? You have chickens color. The Mutala influencer. Yeah. That's what that's what I told you. The large quantity is very good. That's very good. Let's take the lunch. The expensive one I can. I have to. You have to do it proper. Then get proper. I can watch. I will. Yeah, I have. I was so excited to be this. All the people that from the company. I asked them something one hour. That's from a good food. We have the bonus in one. Our diamond area. The life of the great yeah, smart truck. You must have like coming here, we can have the that's just oh my god, I did not. You did not. I did. Why? It's ridiculous. God, what we follow. That's been quite a good as it was. Oh, I was sad. I don't know, 6. Because I did the really I think they have the yeah. I would do that. I like the way you go for it. Then you so from last I'm treating on it the party and see. I don't think it was not. Love it, I like it. But it would be nothing but it's all the way. I said, that you don't know. That's all right. Yeah. Yeah. Was just a bit same. It's really good. Anything. ये बात सामने बनाते हैं मुझे देखा रजिस्ट्रेशन हो तो करना है इधर पे कुछ नहीं है शाम with the heating touching yeah yeah keep the bag yeah I was there's a bag no, I have white tissues. Oh, yeah. I think okay. The ball. Okay. I will come. Have it. Each. Will come back with the welcome. You are very bad. कुछ अच्छा सा सिखाना मैं बहुत कितना माया बेचारी costa months कुछ अच्छा दिखा मत मिलाए है मत मिलाए धीरे धीरे मत मिलाए माया गरजू या ताकि उसके आपको बताना याद रहेगा मत मिलाए माँ तिमी मत मिलाए समझ आया माँ means माँ मेरे बड़ी Timilai means you. But Timilai my girls. My means love. Girls I do. अच्छा I love you बोला. I love you जैसा. I love you कैसे बोलते हैं? ऐसे बोलते हैं मत Timilai my girls. मत Timilai my girls. मत Timilai my girls. क्या बोलते हैं? याद रहेगा तो बताइए. चुपचाप सिखाया उसे करती रहती एक बेचारे नेपाली मेरे को ऐसे नेपाली गुस्सा होता है तो ऐसा बोला मेरे को नहीं पता था ना नहीं बोलना चाहिए साटा वो कौन वाले में बोला था तो मंचे होता ऐसे देखते कैसे रोज बोलते ब्लॉक करो रास्ता बंद करके जरा देखते हैं टीचर कहाँ से आते हैं वो हमारे बीच में जितना और जो सब कुछ रिकॉर्ड और जो सब मेरे दिमाग में जाएंगे कि नहीं वो लाइक मैंने पॉडकास्ट देखो थोड़ा सा सुना ना लाइक ब्रेक में हमने जो कन्वर्सेशन वाला सब रिकॉर्ड हुआ लाइक क्लियरली मच लाइक क्लियरली तो नहीं सुना जाता लेकिन सब कुछ कोई नहीं
Question 81. Question 81. Each company. Requirement A for 16 marks. Requirement B for 4 marks. And requirement C for 4 plus 6, 10 marks altogether. 30 marks question. Requirement A for 16 good marks. Describe 8 audit risks and explain the auditor's response to each risk in planning the audit of each company. Same requirement. We need to identify 8 audit risks and write down the auditor's response. This scenario relates to 5 requirements. There are 5 requirements in this question. It is 1st July 20x5. You are an audit supervisor with Apricot company and you have assigned to the audit of Peach company. You are going to audit Peach. You are coming from Apricot. A soft drink manufacturer, meaning your client is a soft drink manufacturer which sell to wholesale customers. And in manufacturing companies, there is always a risk of overstatement of inventory. If inventory is not recorded on lower of cost and RV, there could be chances inventory overstated. If we are unable to identify it, we can write down this one. Otherwise, move towards scenario. You are currently planning the year-end audit for the year ending 31st August 20x5 and have received the following notes from the audit engagement partner. Materiality for the draft financial statements has been calculated as 153,000, which is a 5% of profit before tax. Now every amount we will compare with 153,000 if below immaterial, above material. We don't need to calculate percentage. It's already calculated. Planning meeting notes. A new accounting system was introduced via direct changeover in March 20x5. It has been successfully tested. Prior to its implementation, and management had such confidence in the new system that they did not consider it necessary to undertake further testing for after implementation. If company have introduced new accounting system, there could be chances of early stage bugs, errors, which could result into misstatement in the financial statement, but they have tested properly. Before implementation, they have tested. This means those bugs, errors, they have removed. But there could be chances staff is not properly trained. If they are not properly trained, they are making mistake in performing transactions. And they have changed from manual system to computerized system. If the manual data is not completely converted into the system, there could be chances financial statements are manipulated. Manipulated means could be some figures understated, could be some figure overstated. So manipulation. This is we can write down. Risk, audit risk, and auditor response. So new IT system. I'm not going to write down the risk that you will write down by yourself. I'm moving towards audit response. The issue is that if the data conversion from manual to computerized is not performed properly, mean some data is not converted to computer system, financial statement could be manipulated. What will be our response? What will be our response? What will be our response? What we can do? We can compare computerized data with the manual data to identify any differences that need to be investigated. So compare manual data with automated data, mean system data, to investigate the identified differences. Is that what else? What else? How we can ensure staff training? Staff is properly trained how to use the system. Review staff training record. To ensure training is performed or conducted before implementing the system. One risk done. Moving towards next. Planning meeting notes. A new accounting system was introduced. Okay. Each company has been developing a new production process which will help to reduce sugar in its drink by 50%. New production process that will reduce sugar in drinks by 50% because companies sell drink. Development commenced on 1st November 20x4. Year end is 31st August 20x5 during the year. And the total amount capitalized was $0.8 million. This means development costs they have capitalized. On 1st May 20x5, the Food Safety Authority approved the process and production of the new reduced sugar soft drink commenced. But they got approval on 1st May 20x5. So we can say development cost. For IAS 38, development costs should be capitalized by meeting certain criteria, i.e. technical feasibility, commercial viability, availability of resources. If company capitalizing development costs without meeting criteria, asset could be overstated. How we can verify this? What will be our audit approach, whether the criteria is met or not? Commercial viability, how we can check? Review customer order, or market research documents to ensure what Commercial viability. What else? There could be chances like cost, how much the cost they have capitalized? 1.8 million. So there could be chances cost is not measured liably. How we can verify cost? Inspection of budget copy, cost budget. To verify cost capitalized, measured reliably. And there should be intention to use complete ourselves that we can verify by review of board minutes. Verify management intention to use complete ourselves. We can write down like if companies are not amortizing development cost, chances that asset profit could be overstated, expenses understated. So recalculation of amortization using the rate and policy and compare with management calculation for accuracy. The same procedure we write down for verifying depreciation. Recalculation of depreciation using the rate and policy and compare with management calculation for accuracy. Same we can apply for interest expense. Recalculation of interest expense using the rate and amount and compare with management calculation for accuracy. The same we can apply on tax. Recalculation of tax expense using the rate and profit and compare with management calculation for accuracy. Cramming. So two issues we have identified, two risks we have identified. Okay. Peach company has inventories of high sugar drink costing 227,000, which it can no longer sell in its home market, which it can no longer not sell in his home market due to a lack of demand. If there is no demand, this need to be reduced down to scrap value. Due to this, inventory could be overstated. Okay. The directors believe Peach company can sell the remaining inventory to an international customer at a price that marginally exceed cost. But Peach company will be responsible for all costs related to delivery and shipping of that drink. Even by bearing this delivery and shipping cost, they will not be able to sell above cost. In NRV will be lower than cost because they can sell a little bit above cost, but they need to bear these costs to sell. By deducting cost of sale, even NRV will be lower than cost. So there are chances if company not adjusting this inventory as to 27,000 is a material if they not adjust this inventory per IAS to lower of cost and RV, inventory could be overstated. Inventory could be overstated. What will be the response? Now we can verify. How we can verify how much inventory relating to this. Identify inventory units requiring adjustment from inventory count sheets. In this category of inventories having how many units, we can identify from inventory count sheets. Discuss with management. Regarding adjustment in financial statements in relation to NRV calculation. What else we will do? Recalculate, estimate it, NRV, and compare with cost to ensure inventory stated in financial statements on lower value. In what price they are saying at this price we can sell, what could be the delivery expenses, those are what estimated, not actual. So we can compare what is the cost from inventory records and make sure inventory is recorded in financial statements at lower value. Three issues we have identified. Let's move forward. Each company replaced two items of machinery in its production line to accommodate a change in the type of bottle used. So they have replaced two items of machinery in its production line to accommodate a change in the type of bottle used. There were significant staff costs involved in preparing the site for the new machinery. And if that cost, means staff cost, is incurred to enhance productive capacity of the asset, that should be capitalized. And in testing that the new machinery was operating correctly, these costs have been included within the wages and salaries expense for the period. Those costs meeting capitalized criteria, they must be added to the machinery asset cost, capitalized rather than recording to P&L. And if with meeting criteria, company is expensing out, chances that asset profit could be understated and expenses overstated. Despite the old machinery being sold at a significant loss, during the year, the directors of each company decided to extend the useful life. This is another issue. But first, we should discuss about capitalized and revenue nature expenditure. So we can say wages and salaries are machinery improvement. Machinery improvement cost. So per IA 16, cost incurred to enhance productive capacity of asset should be capitalized to asset cost. If management charging staff cost to wages despite meeting capitalized criteria, chances that assets, profits could be understated and expenses overstated. Is that how we can verify this, whether they are meeting capitalized criteria or not? How we can check that, whether they are meeting capitalized criteria or not? Review payroll records. To identify the nature of work performed, either need to be capitalized. Discuss with management regarding the accounting treatment of staff cost to see if reasonable. Might be they will say we are not that much dumb. Instead of capitalizing, we are reducing our profit. We know better. So they will justify these are revenue nature. That's why we have recorded as expense. To see if reasonable, if their discussion seems reasonable. And there is another issue, they have changed useful life, I think so. Despite the old machine being sold at a significant loss, old machine they sold at loss. Why they sold at loss? Why they sold at loss? Because they were charging lesser depreciation in previous year. They were charging lesser depreciation in previous year, mean the asset value reduced every year more than they recorded in the financial statement. That's why there was a loss on sale. During the year, the directors of each company decided to extend the useful life of plant and machinery by an average of 5 years, and still they are moving towards more life. Still they are moving towards more useful life. And there is a serious indication they are trying to overstate asset, profit, and understate expenses. So this we can put down as a heading, useful life of asset, that they have increased to 5 years or more. And there are indications from previous disposal, they sold the asset on loss due to this increase in useful life of asset. Will result into what? Overstatement of profit, assets, and understatement of expenses. How we can verify? How we can verify? We can consult independent expert regarding useful life. We can obtain representation from management regarding reasonable estimate, and we can discuss with management the reason behind increasing useful life, as there is evidence of loss on disposal from previous more depreciation, lesser depreciation, to see if reasonable. What else? How many we have written down? 1, 2, 3, 4, 5. 3 more. A member of the finance team was dismissed by Peach Company in May 2025. After it was discovered that they had been fraudulently purchasing non-current assets for personal use. Okay. Peach Company started to investigate the fraud at the beginning of June 2025 by reconciling all physical assets to the non-current asset register, but will not have completed the reconciliation by the year-end date. There is a discovery of fraud. What fraud they have discovered? Staff was purchasing non-current assets for personal use, and while performing reconciliation, they haven't performed completely. So there could be chances some assets may not be exist into the business, but still remain in the record. That could result into overstatement of assets if they do not exist. So we can write down risk. What? Fraud. Due to staff fraud. There could be chances of assets stolen resulted into overstatement of assets in financial statements if they do not exist physically. How we can verify? How we can verify? How we can verify physical inspection of the asset to verify their existence? And there is a fraud. What will be our audit response? Auditor should increase its fraud risk factor. Auditor should increase its fraud risk factor and revise audit plan. Now we need to reduce the materiality level. We should move towards a more substantive approach because there are chances of fraud. If there are chances of fraud, we should change our audit approach, move towards more substantive procedure, as well as reduce the materiality level. Means small amount we should not even be tolerating. Because if we have discovered one fraud, there could be other fraudulent activities in the organization. Each company entered into a contract on 1st May 2025 with a new supplier of bottles. Peach Company has committed to a minimum order quantity of 150,000 bottles per month for a period of 12 months commencing 1st May 2025. In this commitment, they need to perform. At least 150,000 bottles they need to order from supplier. No costs have been accounted for to date as no amounts are payable for the first 6 months. Each company has committed to minimum order of 150,000 bottle per month for a period of 12 months commencing 1st May 2025. No cost have been accounted for to date as no amounts are payable for the first 6 months. It might be they haven't purchased the inventory. This means they haven't fulfilled their commitment. 3 equal installments are then payable across the remainder of the contract term. Peach Company's previous supplier have launched a legal claim against Peach Company for breach of the contract, stating that Peach Company did not have the right to exit the engagement early. Peach Company lawyers have indicated that it is likely to lose the case. I mean, there is a probability, and have estimated the amount payable to be in the region of 0.3 million, and 0.3 million is 300,000 as compared to 1,53,000 is material. And per IAS 37, provision is required. If they do not record the provision, chances that expenses, liabilities could be understated and profit overstated. Because as per lawyer, there is highly likely company will lose the case. There is probability. Our response? Consult lawyer regarding the probability of losing the case, discuss with the management regarding their intention to account for this event in the financial statement, and we can obtain written representation because matter is involving judgment estimate based on likelihood 50%, less than 50%. So obtain written representation from management regarding the reasonable estimate. Is it? In order to fund the development of the new production and the purchase of new machinery, Peach Company obtained an interest-bearing bank loan of 12 million. On 1st March 2025, what was your year end? 31st August, when the loan was obtained. 1st March, how many months? March, April, May, June, July, August, 6 months. Interest they need to record. Repayable over the next 3 years in arrears. In order to secure the bank loan, Peach Company agreed to maintain a minimum net profit margin and meet specific sales target. First, if they do not accrued for interest in the current year, obviously they will pay after 1 year along with the installment, annual installment, but for current year, 6 months interest should be accrued for in the current year. If they do not accrued for, chances that expenses, liabilities could be understated and profit overstated. Is that? And next, what the loan time period is 3 years. The installment that you need to pay within 12 months, that should be recorded under current liability. And the money that you need to repay in more than 12 months, mean after 1 year, that should be recorded as non-current liability. If they are not properly classifying the current and non-current liabilities, financial statement could be misstated. 1.2 million is material. What will be the audit response? Recalculation of interest expense using the rate and amount, loan amount, multiply by time period 6 months, and compare with management calculation for accuracy. Is that? What else? Review financial statements to ensure classification of current liabilities and non-current liabilities amount. To response enough. And this was a difficult question from where we are able to identify exact aid risk. Exact aid risk. But they were specifically stated. Requirement B of the question. Describe apricot responsibilities in relation to prevention and detection of fraud and errors. Who is apricot? You are apricot. Who are you, auditor? Your client is Peach. What are the auditor's responsibility in relation to prevention and detection of fraud? The auditor main responsibility is to express opinion on the financial statement. It's not our primary responsibility to prevent, detect fraud. But auditor should so design audit procedure with intention of detecting fraud. And for that purpose, auditor should assess risk of material misstatement due to fraud at planning stage. And auditor should maintain his professional skepticism throughout the audit. In 4 points, we need to write down cramming from chapter 6. And part C for 10 good marks. Part C for 10 good marks. Identify and explain 2 ethical threats, not more, only 2, which may affect the independence of apricot audit of the company. And for each threat, recommend an appropriate safeguard. 2 threats, 2 safeguard, 4 marks. Okay. Peach company has an audit client of apricot company for the last 15 years. Long-standing relationship, familiarity threat could affect auditor independence subjectivity. As per ECC codes of ethics, key audit personnel should be rotate of the audit every 5 years. The audit staff of apricot company and the client staff of Peach and company have always enjoyed a meal together. Okay, they are bringing their own meal and eating on the same place, there is no issue. They can enjoy. At the start of the final audit, Alan Edward, the managing director of Peach company, has this year suggested that instead of a meal, all the audit staff and client staff go away for the weekend to a luxury hotel at a Peach company expense. This means meal was also provided by the client. Now they are saying we should provide them luxury hospitality, self-interest, as well as familiarity threat. The client should be requested not to provide this kind of hospitality to audit staff, and audit staff should be instructed not to avail this kind of hospitality from audit client. Alan Edward had also suggested that the current year audit fee is renegotiated to be based on a percentage of Peach company's net profit for the year. Percentage fee, contingent fee could pressurize the work, self-interest, as well as intimidation threat. The fee should be decided and fixed before starting the work. But how many threats he asked? Why he asked 2? He should ask 5 so that we can get good marks. Okay. But he's not generous. This year, for the first time, Apricot and company has been approached by Peach company to help identify potential targets. Targets mean they want to acquire other businesses, and they are asking Apricot company mean auditor. Discussions are currently at the early stage and no work have been undertaken at the present. The total fee in relation to the audit and other work should fall within acceptable level in line with ACC codes of ethics and conduct. So this finding potential business targets for acquisition is of minimal level of function. Right. If we are performing along with audit advocacy thread, so we can perform, but through Chinese walls. Part C of the question for 6 good marks. Describes substantive procedure. The auditor should perform to obtain sufficient and appropriate audit evidence in relation to Peach company development expenditure. You need to write down substantive procedure to verify development cost. Compare country balances the previous year to investigate unexpected fluctuation. What else? Review board minutes to verify management intentions to complete, use, or sell. How we can verify commercial viability? Review order book and market research documents to verify there is demand in the market. How we can verify technical feasibility? Review existence of prototyping. Review existence of prototyping, i.e. sample product exists to verify technical feasibility. Ability to use complete or sell. Discuss with management regarding production capacity to produce these newly developed products in existing production capacity. Availability of resources, financial resources are been verified. Review cash position of the company by inspection of cash book bank statement. Companies are having enough of fund to develop the product. Cost reliably measured or not. Inspection of cost budget to verify cost has been measured reliably. And regarding this amortization, recalculation amortization using the rate and policy and compare with management calculation for accuracy. Even regarding amortization, we can consult independent expert regarding the useful life of the product. You need to write down. Then we'll be able to attempt this kind of easy marks part in the exam paper. This is not related to scenario. Straight away, you need to vomit 6 procedures. Boah, 6 marks. And there is the issue in this type of question. First two, we can write easily. While moving to third, we need to think what we can write. And after third, our hands stop working because mind stop working. Nothing coming through. Maximum 1, 2, 3 time vomiting you can do. After that, it's difficult. So that's why we need practice. Practice. Moving towards next question, ESK company. ESK company is having again requirement A for 4 marks, requirement B for 4 marks, requirement C for 16 marks, and requirement D for 6 marks, altogether 6 marks question. Requirement A of the question. ISA 210 agreeing the term of audit engagement requires an auditor to establish whether the preconditions for an audit exist prior to accepting an audit engagement. Chapter 2 or 3. Engagement letter, where we have studied engagement letter. Engagement letter. We haven't studied engagement letter. How come? Should be in chapter 3 then. Here we have studied engagement letter. Chapter 5? Yes. Procedure before accepting audit. Procedure after accepting audit. We need to verify our appointment. We need to verify previous auditor proper departure. And we need to sign our engagement letter with the client. And what is engagement letter? It's a formal appointment letter of the auditor to agree terms of audit with the client. And there are some contents of engagement letter that examiner asks in the exam straightforward. Objective and scope of audit we write down in engagement letter. What are the management responsibility relating to audit? What are the auditor responsibility? We write down in engagement letter. What will be our scope of audit? Mean how we will perform audit? Either we are going to audit a single company or group company. What will be the accounting standards that management need to apply? What will be expected form and content of audit report that we will issue? In under what circumstances we will issue qualified, under what circumstances we will issue adverse, under what circumstances we will issue disclaimer. Statement that during audit we will communicate weaknesses through letter of weaknesses. During audit, if we require any representation, management will provide us. If other services we are providing, what are those? Basis of fee, mean how the audit fee will be paid, either complete ones or in percentage like half start of work, half at year end. And complaint procedure during audit, if auditor is facing any issue, to whom they can complain. Before signing this engagement letter, auditor must ensure about the preconditions for an audit. And there are 5 preconditions for an audit. First, establish. Where is the first? Present common understanding. No. First, we should make sure the financial reporting standards are acceptable or not. It's not written there. I'm writing there. The applicable financial reporting framework means standard is acceptable. If not acceptable, we should discuss with management. And remaining 4 are what management responsibility that we need to agree with management. To prepare financial statements is the responsibility of management. To implement internal control system, it is the responsibility of management. To provide access to records for audit purpose, it is the responsibility of management. And to provide all information to the auditor for audit purpose, it is responsibility of management. These are what 5 preconditions of an audit. Mean before signing engagement letter, auditor need to make sure these preconditions exist. These 4-point management responsibility are also called demise of audit as well. Demise of audit mean management responsibility that we need to agree. Straightforward. 4 marks. If you have learned, you will be able to get these 4 marks. Otherwise, we are having 96 to get 50 marks. Requirement B for 4 marks using the table below. There's a table below. Okay. But this table is saying so for 20x4, 20x5, we need to calculate gross profit margin, inventory holding period, mean inventory days, receivable days, payable days. How to calculate gross profit margin? GP over sale into 100. Inventory days, closing inventory divided by cost of sale multiplied by 365. Debtor days, receivables over credit sales multiplied by 365. Payable days, purchases over payable. Now, payable over purchases multiplied by 365. If purchase figure is not given, we can use cost of sales. So for 20x4, 20x5, we need to calculate this. Is there data available for 20x4, 20x5? Yes, this data is also given. Sale figure are given for 20x4, 20x5. GP figure is given, cost of sale given, inventory receivable are given, payable are given. We can calculate ratios for 20x4, 20x5. 4 marks. Easy. Examiner cannot cut even a 1 mark from these 4 if you have calculated figures accurate. Requirement C, using the information provided and the ratios calculated, describe 8 audit risk and explain the auditor's response to each risk in planning the audit of ESK company. Risk and response. And requirement C, you need to write down substantive procedure to verify trade receivables. That we have covered for receivables, for payables, sale, purchase, inventory, non-current asset. These easy marks, 6. These are 4 easy marks. If you know about preconditions, just you need to warm up 4 points, 14. And from these 16, we need 8 marks to pass. If we are unable to get all 16, we need to how many marks? 8 marks to pass. There are 50 easy marks available in the exam paper. 50 easy out of 100. 25 medium level difficulty. And 25 very difficult. We should make sure those easy 50 marks we should not lose. And we'll try to get 10 marks from medium. We have passed the paper. Even if we have covered the complete syllabus, we'll be able to tackle those very difficult 25 marks as well. Those very difficult 25 marks will be for those students who haven't practiced the kit, who haven't completed the syllabus fully. I mean, they are moving towards the exam on choice. Okay, leave this topic, prepare this, leave this, prepare this. The topic that we have left might be they have tested 10, 15 marks from that topic. So we are having no time. So this question you will cover by yourself. These 3 questions you need to attempt today before moving to bed. I don't know how you will find the time. Either you will be sleeping at 3 o'clock in the morning or 5 o'clock in the morning, or it's your issue, not my issue. Because you have paid the fees, you are going to attempt the paper, and you need to pass this paper in this attempt. There are more students who pass this paper either in first attempt or fourth attempt. There are very few students who pass this paper either in second or third attempt. More students either pass in first attempt or fourth attempt, especially this paper. Not only this, PM as well. In most of the students pass PM and audit paper either in first attempt or in fourth attempt. There are very few who passed in second or third. Why? Because in first attempt, if you haven't passed, most of the students are failing on 46, 47, 48 marks. And they are having in their mind, I am failed with 4 marks. In fact, you lost 54 marks. But they don't realize this. They are keeping in their mind, I failed with 4 marks. I need to prepare only 4 marks more. They don't realize you lost 54 marks. You got 46 with your preparation. Now you need double preparation as compared to before. But they are having in their mind, I lost with 4 marks. And in second attempt, they prepare for 4 marks more. They don't put double efforts as compared to before. Even they don't put even half of the efforts of before. Because in their mind, I lost with 4 marks. I know everything. I can pass. Just I need to prepare a 4 marks more. And they lost again with the same marks on second attempt. Still, they are keeping in their mind, oh, I'm losing with 4 marks. They're not realizing I'm losing with 54 marks. Oh, in second attempt, I spent only 1 month. This time I should spend 2 months properly. And again, they are having in their mind 4 marks. And this paper is too boring. If you have studied once, you don't convince yourself to study again. Spending the time on this boring theory is difficult to manage. In third attempt, they are again moving with the same perception. Yes, I have lost 4 marks in 2 attempts, so I need to prepare for 4 marks properly. And again, in third attempt, they study about 10 to 15 days before exam. And then they are moving towards attempt. And now they are failing in third attempt below 30s. Because to pass one failed paper, you need double efforts than before. If you don't put, you'll be failing again and again. And then after failing in third attempt below 30, they realize, oh no, there is something wrong. Then in fourth attempt, they join the classes again. They try to become regular. They try to cover each and everything properly. And then by attempting in fourth attempt, they pass paper above 60s. Some students even didn't realize on fourth attempt as well. They are still keeping in their mind, oh, I'm losing with 3, 4 marks. Come on. I need a little bit more effort than previous attempt. And they are failing again and again. I have faced one student 3 years back who failed this paper 8 times. Why? Students are not practicing question, especially this risk question. While listening to the teacher sitting in the classroom, more things are too beautiful. Just we need to write down this will be understated, this will be overstated. That's it. But while writing down, they realize no, it's not that much beautiful. We need to read the answer, how we can prepare this sentence, how we can show this expression. Because for this paper, expressions of words are important. Your each line that you are going to write for 1 mark, that is important. You need to practice how I can get 1 mark from this line. If I'm writing one procedure, one response, how I can get 1 mark. If I'm writing one safeguard against a threat, how I can get 1 mark. If your that line is not justifying the mark, then we'll simply cross, go, get lost, come again, pay the fee again. So we are having a few days remaining. If you practice these 3 questions today, you'll be able to tackle this question in the exam. If you're not practicing these 3 questions today, ultimately you will be in trouble. Because now the knowledge is fresh. You have listened my words, you got some idea what to write, how to write. So try to practice these 3 questions today. Either you are going to attempt this paper in December or March. Try to attempt these 3 questions today. Then we'll be able to tackle this question in the exam. I mean, this one topic is prepared. In remaining days, you need to focus on other topics, and other topics are easy. This is the most technical topic in any of the audit paper, audit risk. Here you are having 30 marks question. Out of that 30 marks, only 16 marks. In advanced audit and insurance paper, there is a 50 marks question on this audit risk topic. where we need to explain the accounting standard first, then we will need to link with the risk. So wish you best of luck. This was our last class. Hope we had a good session. In case of any issue, I'm available on WhatsApp for practice one more class. Tomorrow, day after tomorrow. Let me think, let me check because tomorrow, day after tomorrow, I'm having FA class. But those students are having some clash with the MA class. So let me check, will inform. If not tomorrow, day after tomorrow. See you then.